In this video, I'll discuss Q1 FY26 result and Concall of Home First Finance, which is a affordable housing finance company. 85% of their AUM comes from the housing finance, then 15% comes from LAP, loan against property. If I talk about their average ticket size, that is around 11 lakh, 12 lakh, and Home First Finance is more inclined towards the salaried class people, whereas if we look at other affordable housing finance company like India Shelter, Aptas Value, Avas, then they are more inclined towards the self-employed people. Okay, in terms of the geography, Home First Finance is fairly diversified along with 13 states in India, and their main states are Gujarat and Maharashtra. 30% of AUM comes from the state of Gujarat, and then 14% comes from Maharashtra, and 13% comes from Tamil Nadu. Okay, so let's talk about their Q1 FY26 result. In terms of the AUM, they grew their AUM by 29% in this quarter to around 13,500 crore. If we look at their growth trajectory, then till Q2 FY25, they were growing around 33-35 level. Okay, and then in Q3 Q4 they were at around 30% range, and they are now below 30%, which is a negative thing if we look at their trajectory, because they were a company which was growing at a 30% rate, above 30% rate, and now the AUM growth came down under 30%, which is not a good thing. So that is the point with AUM. And if we look at their guidance also, the management is guiding for a 25 to 26% of AUM growth for next 2 years. So that is a negative thing, obviously, because we as a equity research analyst, we always look for a company who are growing their AUM at a high pace, and and the company who can increase their growth rate. So that would be the best thing. So that is the point with the AUM growth. In terms of the disbursement also, if we look at their trajectory, till Q2 FY25, they were growing their disbursement around 22%. In Q3 FY25, they grew their disbursement by 18%. Then Q4 they grew their disbursement by 15%, and now in this quarter Q1 FY26 they grew their disbursement by just 7%, which is absolutely not a good thing. And what the management is saying about this low growth in disbursement, they are saying that month of April was little bit low, below expectation. So that is why the disbursement grew by just 7%. But they are saying that after April, May and June was pretty good. So they are expecting a good kind of a disbursement growth going forward, because they are saying that for the whole year FY26 they will do around 5,600 crore of disbursement to around 5,800 crore of disbursement, which is around 20 to 25% of disbursement growth. And they are looking for 100 crore of increase quarter on quarter for this year. Like in this quarter they disbursed around 1,250 crore rupees, and then Q2 they are looking for a disbursement of 1,300 and 1,350 crore. Okay, then in Q4 1,450 crore, then Q3 1,450 crore, and then in Q4 they are looking for disbursement of 1,550 crore. That is their target, and that is how they are looking to do around 5,600 crore of disbursement in this whole year FY26. So if they can do it, then it is pretty good, because the whole year growth, the growth in FY26 over FY25 will be around 20%. Okay, and 20% disbursement. So they would need around 20 to 25% of disbursement to grow their AM by 30%. So that is the point. So if they can able to do it, it is really good. So in terms of the guidance, there is no problem, but in terms of the execution, for last 3 quarters, if we look at their growth in disbursement is relatively pretty slow. So that is the disbursement point. So let's talk about the asset quality. Okay, in terms of GNPA and NPA, they are stable at a similar kind of level for last 5-6 quarters, which is really good that the asset quality is pretty much stable in this company. In terms of credit cost also in this quarter they reported a credit cost of 0.4%. So 0.4%, and if we look at their guidance in the previous quarter, they are guiding us for a they have been guiding us for a 30 to 40 bps of credit cost, which they matched in this quarter, and in the last few quarters also the number is more or less in the level of 30 to 40 bps. So in terms of credit cost also there is no problem, and they are expecting a credit cost of 30 to 40 bps going forward. So they are expecting a stable credit cost going forward. In terms of and if we look little deeper, because if we look GNPA and NPA credit cost, this number are stable in Q1 FY26 and have been stable for last few quarters. But if we look at 1 plus DPD, 30 plus DPD, in this quarter 1 plus DPD increased by 90 bps year on year and quarter on quarter. 30 plus DPD increased by 60 bps year on year and 50 bps quarter on quarter. So if we look at the jump in 1 plus and 30 plus, that has been really steep. So that is the point I would like to say, that and the company management is also saying similar kind of thing, that because Q1 is a seasonally weak quarter, whereas the Q4 is seasonally very strong. So quarter on quarter 30 to 40 bps increase in these parameters are normal. But the question is, where is this extra 40 to 50 bps 1 plus DPD and 30 plus DPD is coming from? So that is the question. And the company management is saying that 2 regions where we faced some problem, one is Surat and one is Tirupur. Okay, Surat in Gujarat, Tirupur in Tamil Nadu. In these 2 regions they face some kind of delinquencies in July and in Q1 FY26. And the commentary of the management is that in Surat in the month of June there was a little bit high delinquencies, but the thing is that many people out of those who missed their EMI in the month of June, many people paid 2 EMIs in July. So that is the thing they are saying, that Surat there was some problem in June, right? But in July they are seeing a turnaround in Surat market. So that is the point the management is saying, that in July many of them paid 2-month EMI, like June plus July. So that is why they are not very much worried about Surat. But they are saying that in Tirupur it would take another 1 to 3 months to see a good result. So in Tirupur there is some kind of high delinquency level that we have to look at, that how the Q2 FY26 turns around. So that is the point. But in Surat they are saying that it came back to a level of normalcy. Okay, so that is the point. And in terms of the whole company also, they are saying that the July is pretty good if we compare it to June and May. So in terms of the whole geography, whole company, they are seeing a good kind of a traction in terms of the asset quality improvement. In terms of their Opex to asset in this quarter, and if we look at their number also in the past, it has been in a similar kind of a range. So in terms of the Opex, they are also expecting to be in the similar kind of a range. So that is the point with Opex. Opex number, I do not have the Opex number, but Opex in this quarter they reported a Opex to AUM of 2.7%. Okay, so it has been in a similar kind of a range for last 5-6 quarter, which is good enough. Even though they are not getting the operating leverage that they should get, but the number is stable in a range. In terms of spread also, it has also been stable for last 5-6 quarter, which is a good thing because the rate were rising for last 1 year, and they are expecting a reduction in cost of borrowings, because they are saying that now the cost of borrowings is at 8.4%, and in Q2 there will be a reduction of 20 bps, and going forward in Q4 FY26 there will be another reduction of 20 bps. So they are expecting an improvement in terms of the cost of borrowings. So that is a good point. So they are looking for a 5 to 5.2% of spread going forward in the next few years. So in terms of the spread, they has been in a range of they have been in a range of 5 to 5.1%, whereas they are guiding for a 5 to 5.25% of spread going forward in next 1-2 years. So that is the thing with the spread also. And cost of borrowings, I have already said that they are looking for a reduction in cost of borrowings in FY26. In terms of PAT, they grew their PAT by 35% in this quarter year on year, and in terms of operating leverage also, they got the operating leverage which has been missing for last 5 to 6 quarter, if I am not wrong. Then in this quarter they got the operating leverage, which is good. Okay, so in terms of the whole company, if we look at the whole company, the direction Home First Finance is going is right, absolutely right. There is no problem with that. And if we compare it to India Shelter, which is the best company in this space, India Shelter is growing at 35%, whereas Home First is growing at 28, 29, 30%. So in terms of the EM growth, it is little bit in a lower side if we look at their past. But in terms of the whole company, if we look at all the parameters, then it is a good company. Absolutely it is a good company. In terms of the asset quality also, they are absolutely clear, absolutely in a range. If we look at the asset quality in terms of the PAT, in terms of AUM also, I can say they are a good company. But again, if we compare it to India Shelter, I think the opportunity is better in the India Shelter. So that is the point. But again, Home First is a good company. So that is the point with Home First Finance. So that's it for the video. Thanks for watching.